You are 24, sitting on the edge of your bed at 1:13 a.m., staring at your bank account like the numbers might apologize if you wait long enough. Your paycheck arrived 3 days ago. It looked healthy for almost an hour. Then rent left. The phone bill followed. Your car payment waved from the doorway. Groceries took whatever dignity remained. Now the balance is low enough to make you sit up straighter, as if posture can improve cash flow. This is the first stage of your financial life. Earning money and immediately discovering it has somewhere else to be. Nobody warns you how fast a paycheck can disappear while still technically touching your account. You worked 2 weeks for it. It stayed for a long weekend. That feels personal. At first, money is simple. You get paid. You pay for survival. You buy one thing you probably should not. Then you promise next month will be different. Next month arrives wearing the same bills with slightly higher confidence. You begin to learn that income is not the same as available money. Your salary sounds impressive when you say it out loud. Your checking account has a different version of the story. One number lives on job applications. The other decides whether you add avocado. Then you discover gross pay and net pay are two different people. Gross pay is confident. Gross pay makes plans. Net pay arrives after taxes, insurance, and benefits have taken turns explaining adulthood. You stare at the pay stub and realize you earn much more money than you are apparently allowed to meet. Your first reaction is suspicion. Your second is acceptance. Eventually, you stop thinking of the missing money as missing. It becomes part of the machinery behind your life. Health coverage, retirement deductions, government programs, and several lines on the statement that look important enough to avoid touching. This is when your paycheck stops being a number and becomes a negotiation between the life you imagine and the life already making withdrawals. Then you meet the credit card. It enters your life looking helpful, clean, convenient, almost friendly. It lets you solve a problem today and introduces you to the bill later. Future you becomes a silent business partner who never attends the meetings but somehow approves everything. The first balance is small, a dinner, a tire, a few purchases that seemed harmless because each one had its own explanation. Then the statement arrives and combines all your explanations into one number. That number does not care that Tuesday was stressful. You make the minimum payment. The balance stays. You pay more. Something else happens. The balance stays again. Debt has a strange talent for turning old decisions into current expenses. The past begins charging rent. A year passes. You get a raise. This feels like the moment life should become easier. For a few weeks it does. Then the apartment gets nicer. The phone gets newer. Delivery becomes normal instead of occasional. You upgrade your car because the old one now feels embarrassing in a parking lot where nobody is looking at you. Your income grows, and your life immediately files a request for matching funds. This is lifestyle inflation. It rarely arrives wearing sunglasses and carrying luxury shopping bags. Usually it looks like convenience. Better groceries, faster shipping, a place with in-unit laundry, small improvements that make perfect sense individually and become expensive. When they form a committee, you are not reckless. That is what makes it difficult to notice. Reckless spending creates a story. Normal spending creates a routine. By 30, you know your monthly expense is better than some relatives. Rent, insurance, utilities, car, subscriptions, groceries. The subscription for the app that was supposed to help you cancel subscriptions. Every charge has a reason. Together, they create a life that needs your next paycheck before it arrives. You start thinking about an emergency fund because adulthood keeps inventing emergencies with invoices. The car makes a noise. The dentist finds something expensive. The refrigerator stops working the same week your insurance renews. None of these events destroy your life. They just arrive close enough together to form a group project. Money sitting in savings once looked boring. Now it looks like the difference between an annoying week and a new credit card balance. The balance is not exciting. It does not glow. It does not congratulate you. It simply waits. For the first time, waiting feels useful. Then you begin investing. At first, it feels ridiculous. You move a small amount into an app and watch it do almost nothing. You expected progress. You receive a line that moves slightly to the right. Some months it goes up. You feel intelligent. Some months it goes down. You feel personally betrayed by the global economy. The amount is small enough that the market movement barely matters, but emotionally, you are already a retired hedge fund manager staring through an office glass. You check the app too often. You learn nothing useful, you check again. Eventually, the habit becomes less dramatic. The money leaves automatically. You stop holding a daily meeting with yourself about whether your future deserves $20. The contribution becomes part of the background, like your internet bill, except this one is quietly buying pieces of a life you cannot see yet. 5 years pass. You still do not feel rich. You still compare cereal prices. You still open your banking app after a weekend and briefly question every decision since birth. But something has changed. There is a balance now. Not a fantasy number. Not enough to disappear to an island. Just enough to prove that money can stay. That proof matters. For most of your life, money has been something that passes through you. Paycheck in, bills out, a few comforts in between. Seeing money remain feels almost unnatural, like catching water that was supposed to run through your hands. Then housing enters the conversation. Rent feels expensive because it leaves every month and never sends you a photo of what it built. Buying feels expensive because the bank shows you a number large enough to make your lungs work differently. You tour homes with bright kitchens, small bedrooms, and suspiciously cheerful real estate photos. You imagine stability. You imagine repairs. You imagine painting the walls. You imagine discovering that the roof has developed financial goals. The monthly payment is only part of the decision. Taxes appear. Insurance appears. Maintenance waits behind the fence holding a toolbox. You realize a home is not just a purchase. It is a lifestyle with plumbing. Maybe you buy. Maybe you keep renting. Either way, the choice changes more than your address. Buying may give you roots, but roots make moving complicated. Renting may give you flexibility, but flexibility can come with rent increases and a landlord who considers beige a personality. There is no clean answer, only different kinds of pressure. But now your career has changed too. You earn more than you did at 24, but your responsibilities have also discovered compound growth. At some point, work reminds you that income is not permanent. A company restructures. A manager schedules a meeting with no useful subject line. Maybe you keep the job. Maybe you do not. Either way, you suddenly understand why every financial plan feels stable right until someone else changes the plan. The paycheck you treated like weather turns out to be more like a subscription. It can end. That possibility changes the meaning of savings again. The money is no longer waiting only for a broken appliance. It is waiting for a gap between versions of your life. A month without work, a move, a career change, a moment when you need time more than you need another object. The balance does not guarantee safety. It simply gives uncertainty, fewer sharp edges. Maybe you support a partner, maybe children enter the picture. Suddenly, money is no longer only about your comfort. It becomes daycare, school supplies, health insurance, groceries that disappear faster than seems physically possible, and shoes that become too small while still looking new. You start making financial decisions for people who are not interested in spreadsheets. They want snacks. They want stability. They want the expensive cereal with the animal on the box. Your money becomes emotional in a different way. Every expense feels connected to care. Saying no feels personal. Saying yes becomes expensive. You learn that love can have a monthly payment without becoming less real. Then your parents get older. The people who once helped you begin needing help themselves. A medical bill appears. A repair cannot wait. A conversation about money starts with silence and ends with everyone pretending it was not difficult. Your financial life is no longer a straight line. It is a table where several generations are quietly passing the same anxiety back and forth. 10 or 15 years into working life, you begin to understand that earning more solved some problems and upgraded others. The cheap apartment anxiety became mortgage anxiety. The old car anxiety became insurance anxiety. The small credit card balance became tuition anxiety, retirement anxiety, medical anxiety, or the fear that one bad month could still rearrange everything. Money did not remove the anxiety. It gave it better furniture. But it also gave you options. You can replace the tire without moving 3 bills into next month. You can leave a bad job without immediately losing the floor beneath you. You can help someone. You can say no to a terrible offer. You can sleep through a small emergency instead of turning it into a family event. That is when money begins to feel different, not like success, not like status, like space. Space between a problem and panic. Space between a paycheck and desperation. Space to make one decision because it is right, not because it is due Friday. The strange part is that nobody can see this space from the outside. Two people can have the same car, the same salary, and the same apartment. One has savings, manageable payments, and room to breathe. The other is one delayed paycheck away from a very intense Tuesday. Financial security is often invisible. So is financial stress. Both can sit at the same dinner table wearing clean clothes. Years continue. The investing account that once looked pointless starts behaving like something alive. Your contributions still matter, but time has joined the process. Growth appears in amounts that once would have taken months to save. You do not feel like a genius. Mostly, you feel confused that something boring finally became interesting after refusing to entertain you for 20 years. Compounding is rude that way. It spends the early years proving nothing and the later years taking credit for everything. You look back at your younger self, the one sitting on the bed at 1:13 a.m. That version of you thought financial life was about finding the right salary. Then it became about surviving bills, then debt, then savings, then housing, then family, then time. You realize money was never one decision. It was hundreds of ordinary moments. The apartment you could technically afford, the car payment that felt manageable, the small balance you ignored, the automatic transfer you forgot, the raise you absorbed, the emergency you survived, the purchase that created a memory, the purchase you cannot remember making. None of them looked like destiny at the time. That is the uncomfortable part. Your financial life is rarely changed by one dramatic mistake or one brilliant move. It is built by normal decisions made while you are tired, distracted, hopeful, embarrassed, or standing in a grocery aisle wondering why laundry detergent now requires financing. Eventually, retirement stops sounding like an abstract country where old people live. It becomes your future address. You begin to picture mornings without alarms, health insurance without an employer, and days that still cost money even when no paycheck arrives. The number you need feels large. The time remaining suddenly feels smaller, but the future is not empty. It contains everything you kept, the small savings that looked pointless, the debt you stopped carrying, the years of contributions, the choices that created breathing room, the habits that survived after motivation left the building. You may not arrive perfectly prepared. Almost nobody does. There may still be uncertainty. There may still be bills. There may still be moments when you stare at an account and feel 24 again. But now you understand what the numbers mean. They are not your worth. They are not proof that you won. They are a record of what your life demanded, what you chose, what you postponed, what you protected, and what you were trying to build. And one night, years from now, you sit on the edge of your bed and open your bank account again. The room is different. The phone is different. Your face is older. The numbers still do not apologize. But this time, they tell a story you recognize. Your financial life was never really about becoming rich. It was about slowly becoming harder to break.